Hi, and welcome to today's video. As the market expected, the Bank of England held the bank rate and the forward guidance unchanged at the interest rate decision meeting yesterday. This was due to the Brexit deal wasn't settled, and the Bank of England wanted the forward guidance and the monetary policy to reflect the Brexit outcome and the UK's relationship with Europe. The Bank of England had been relying on a soft Brexit outcome, which should also be the most likely scenario, due to the fact that the British Parliament had so far been rejecting a hard Brexit alternative. A soft Brexit will lead to the need for more rate hikes than the market anticipated. This will contrast with other central banks who had been on a dovish side lately. The final manufacturing PMI data in the EU area was unchanged from the flash estimate. The PMI index was still below the value of 50 and indicates a contraction in the manufacturing sector. The president of the Bundesbank and one of the candidates to take over for Mario Draghi later this year, Jens Weidmann, had urged the ECB to continue with the unconventional monetary policy as long as the inflation allowed. He believed the weakness in the economy was only temporary. The US non-farm productivity showed a solid 3.6% growth annualized for the first quarter. The quarterly numbers could be quite volatile, but still, the numbers show a positive trend for the yearly growth. From the first quarter of 2018 to the first quarter of 2019, the productivity had grown by 2.4%. This was at 1.7% growth from the previous quarter, and the strongest growth since 2010. Increased productivity helps lift the economic growth. Productivity also reduced costs and cost-driven inflation even with higher hourly earnings. The unit labor costs were close to zero for the first quarter and indicate no need for higher interest rates. And that's it for today's video. Check the video description for more details. Thank you for watching.